Should we make the dollar as good as gold? Two opposing views on that idea. Jeffrey Bell is policy director for the American Principles Project, and Bill Gunderson runs Gunderson Capital Management and hosts Positively Wall Street on San Diego's KCEO Radio. Good to see you both. Bill, go to you first. Why are you again the idea?
Well, I think as we look back at the year 2008, I was there when the market was going down 400 points a day, 600 points a day. I believe that Ben Bernanke stepping in and taking the extraordinary action that he took has allowed the stock market to double since March of 2009. I would hate to tie his hands with the gold standard.
Yeah, but, you know, Bill, at the same time, he has two mandates. One is to keep the stability of the dollar. The dollar has tumbled over the past couple of years, gone to record lows. And the other mandate he has is to keep unemployment down. And unemployment is now over 9.2%. He's failed,
the dollar's
Bill. He's failed is what I'm saying. He's failed on both of his mandates.
Oh, I don't agree with that. The dollar is at 75 cents right now. It's firmed up against other world currencies while the euro is tanking. The dollar should be a dollar, not 75 cents. Well, I mean, investors can diversify and own commodities and diversify their portfolio. What's wrong with owning oil stocks? What's wrong with owning gold stocks? What's wrong with the stock market doubling? So gold is money then. What you're saying, it sounds like what you're saying is that gold is money. I do believe that gold is money. You know, I have 2 tickets to the Padre game tonight. They're money. Yeah. I believe that anything that you can trade for a service is money.
But Jeffrey Bell, the point is what money is it's a store of value. It's a representation of my own work. And if that decreases in value, that means the government is saying that your work isn't worth as much today as it was yesterday. It's taking away my hard-earned effort, isn't it, Jeffrey?
It's exactly right, and Steve Forbes is exactly right when he says the people understand this. I just gave 16 speeches in Iowa on a bus tour with the Iowa Tea Party, and I didn't get one person saying, I don't understand what you're talking about. What's hard to understand is the present system and the way Mr. Bernanke is running it.
It's even hard for Mr. Bernanke to understand. I mean, he admitted as much a couple of weeks ago. He was being grilled by Congress once again about why things are not turning around on the employment front, and he said, we don't have a precise read on why this slower pace of growth is persisting. He doesn't have a clue.
I think one reason is the fact that he's kept interest rates at 0% short term for the last 2.5 years. That makes it impossible for small business to get their usual line of credit, as Ronald McKinnon, a Stanford economist, recently pointed out. Small business lending from small banks is down 2/3, and they're not going out of business, but it's very hard to hire new people. And small business does do the hiring in this country.
Bill,
Mr. Bernanke knows how to manipulate the stock market and the bond market, but he has not figured out how to reduce unemployment because that depends on small business, which is frozen.
Bill, not only is Ben Bernanke admitting he doesn't know why things aren't turning around in terms of the Main Street economy, but also even the New York Times, they have a piece called Stimulus by the Fed is Disappointing. Economists say economists are in general agreement that the Fed's attempt to turn this economy around has failed. And its first job, by the way, is maintaining the value of the dollar, and it has failed on that. The value of the dollar worldwide has collapsed.
Well, that hasn't stopped Caterpillar from hitting new highs.
No.
That hasn't stopped AutoZone from flourishing in this environment.
True.
That hasn't stopped Cummins engines and Ross stores.
But that hasn't brought down the unemployment rate. That hasn't created the green shoots that we need to recover from this recession. Even Bernanke admits that we can't call this a recovery because of the unemployment rate, because of the fact that small business is dying, Bill.
Well, I think if you look at the President's Jobs Commission, maybe he could do a little upgrading there. He's got Jeffrey Immelt at the head of that commission. His stock has gone down 42% in the last 10 years, while the stock market is up 12%. Maybe he needs some better CEOs on that panel.
Would gold be the one thing, Steve Forbes, if we went back to gold, making the dollar as good as gold, would that be something that both Main Street and Wall Street could benefit from?
It would certainly benefit the economy as a whole. It would also do something good for Wall Street to take away windfall profits for particular kinds of activities, getting back to honest activities. And in terms of the crisis of 2008, we never would have had that crisis if the Federal Reserve hadn't begun debasing the dollar in the early part of the last decade. So manipulating the dollar is like manipulating the minutes in an hour. Let's say the government says, let's raise the hour from 60 to 70 minutes. Look what that would do to productivity. People would work longer at the same pay. It's manipulating a measure, should be a fixed measure of value.
All right, Bill, since you're holding up one side of the argument here, I'm going to give you the last word and tell us what you think would happen if we went to a gold standard.
Well, I don't think the gold standard is the issue. I think getting our house in order and not spending more than we're taking in is the real issue.
No, we all agree on that. But again, the idea of a gold standard is the purpose of this segment. So play with us a little here, Bill. Would the economy collapse? Would markets collapse if we went to a gold standard?
Absolutely not. But I think you would be tying the hands of the Fed and limiting the types of action that they can take when times are desperate.
All right, Bill, you're a good sport. Thanks for being with us. Bill Gunderson, Jeffrey Bell, and of course, Steve Forbes. Gentlemen, thank you very much.